stock investment 101. Well, I don't know why NMS has kept this 101. I think it should have been 007. 007, why? Because it requires so much investigation, more than MI5 or PCB or CIA. More research. There's so much risk, so much return, drama and action. So I would better call it stock investment 007. So let me start with the code. Rule number 1, never lose money. What's rule number 2? Never forget rule number 1. Well, since the code by Warren Buffett, without whom I would not have been standing here today. Actually, when I read this code for the first time, I thought it was very cool. It's very cool that I wanted to dig deeper into his life, his companies, his investment, and I found out that stock investment could be a full-time career. Well, 9 years back, when I started investing, and I think it's still the same today. People used to call the stock market a gambling place. Still today, people call it a casino outside Singapore. And even one of our prime ministers said that stock market is a place to gamble. I think a lot of people here remember that incident and the market went down after that. Well, I got a chance to actually watch his company's AGM last Saturday. I watched it for 6 straight hours, and the one takeaway was that DBA is not that important. That's what he said. And he has been the greatest investor of all time. Now to encourage some aspiring stock investors in the crowd today, I have a second quote. He is Peter Lynch. He is the fund manager, he was the fund manager at Fidelity Management Fund back in 1977 to 1990. Well, in his 30 years of experience as a fund manager, he beat the market 11 years out of 13 years. And his stock fund posted a return of 29% on an annual basis. That's a staggering numbers. Now what he says is that everyone has the brain power to follow the stock market. If you have made through 5th grade math, you can do it. So it's not rocket science. Everyone here in the room can actually do it. So that's just a piece of inspiration for all the aspiring stock investors here in the room today. Well, this is not the best of slides you can have at the moment during a presentation or speaker session, but I'm going to actually summarize this down. This is what I've been working on since last week, trying to compare Nepal Stock Exchange index with 9 different indexes in 8 countries. And let's go straight to the graphics now. Now comparing Nepal Stock Exchange with Sensex India, Vietnam, Dubai Financial Market in Dubai, Standard & Poor's and Dow Jones, the NIFTY has grown by 268% over the last 6 years. And you can see other indices has not even compared to it. In the last 3 years, it has grown by 77%. In the last 1 year, 56%, but all other 4 indices of other countries are in negative figures. Now this means NIFTY index has beaten all 4 other indices in the last 6 years. Now let's compare Nepal Stock Exchange Index with the index in Singapore, Sri Lanka and Bangladesh. Now this is what the numbers show. In the last 3 years, NIFTY has grown by 77%. And others you can see. So the NIFTY index, the Nepal Stock Exchange Index has grown significantly than stock indices in Singapore, Bangladesh, and Sri Lanka. Now, why I am saying this? What's the logic? Why I am putting up all these numbers and why I've been working on this and wanted to show you all these numbers. It's because I wanted to prove that there is an opportunity right here in Nepal. Our stock market is small, Yes. Our stock market is not efficient to some extent. Yes. Our stock market is not mature. Yes. The transaction volume is very less. Yes. Our stock market doesn't represent our economy. Yes. There are very less companies to actually pick and invest. Yes. And our stock market capitalization is not even equal to 5% of market cap of companies like Apple. Yes. Now, you don't invest? Actually, I just want to say that there's a big opportunity right here in Nepal itself. Well, I've been active in markets in Dubai, and I've also been trading stocks in the US. But, like the gentleman over here talked about the microfinance thing, if you had put money in Apple stocks in 2011, and if you had put some money in microfinance here in Nepal, then you would have one big tank. So I know that we do a lot of case studies in big global companies, Apple, Starbucks, Boeing and stuff like that. But we need to get out of that fancy stuff and actually focus in Nepal because opportunity is right here in Nepal. The market is at the bottom right now, but the only alternative is growth. That's what I believe. Now, a little bit of my personal bio. Well, I'm going to have to share about my stock investment experience that I've had in the last 9 years. So I started investing when I was 22. Little later after Soviet, I guess. Well, I borrowed $180 from my father. He charged me 18% interest. Now I see that it was a very good rate of interest because I know how much venture capital companies expect in return nowadays. Now, how did I start? Well, I didn't look at any of the textbooks, very honestly. These were the books actually I read. One of the few books actually I should say. Intelligent Investor by Benjamin Graham. Common Stock and Uncommon Profits by Philip A. Bishop. The Cash Flow Quadrant was given to me by my dad. And from 2011 to 2016, I've been consistently generating returns on my portfolio. Now, what went wrong during 2009 and 10, and what worked for me from 2011 to 2016? I had an investment plan from 2011. Well, I meet a lot of investors who are very active in stock market every day, every week, and I've seen very few investors who have made an investment plan. Now, what is an investment plan? It consists of a lot of different things, but I'm just giving you some brief content of the investment plan. It answers questions like, what kind of investor am I? I could be a long-term investor. I could be a short-term investor. I could be a medium-term investor. I could be a day trader. But in Nepal nowadays you can be a 3-day trader because the new demand system allows you to buy and share shares in 3 days. Or you could be a very risk-taking investor or a risk-averse investor. It depends on your personality, and it's very important to find out what kind of investor am I. Because I'll be making investment based on my investment profile. Now, how much do I want to invest the money? How much money do I have? And how do I want to break into tranches and actually invest in the long run? That's also very important. What is the nature of my capital? It could be the capital I borrowed from my friends or my family, or I have a group of friends investing in stocks, or I have a company. It could be private, it could be public, or it could be from the savings. I know of this guy who actually invested 25% of his salary every month in stocks, and in the last 5 years, now he recently quit his job and started his own company. So it could be anything. So the nature of capital is very important because the risk appetite depends on that, and we need to make investments accordingly. A very important tool is what analytical tools do I believe in? Well, when I started, it was all fundamental analysis because in Nepal, the technical analysis was not around much. So fundamental was all about looking at things like PPS or price earnings or peer-to-peer comparisons, industry analysis, and basically finding the undervalued stocks. So I don't want to go more in detail on that. But nowadays, we also use technical analysis on broad indexes. Because the last 2 years, we have found that it actually has become a little more relevant, looking at technical indicators and trading accordingly. But it only applies to broad market index for now. And something that a lot of investors doesn't have, and maybe, I know there are a few investors in the crowd here today, the students, very few might have an entry and exit strategy. You buy a stock at 500, and then it reaches 600, and you think, I'll sell at 700. And the stock reaches 700, you know what you do? You wait till it reaches 800. And when it reaches 800, as you're planning to sell, it goes down to 500. That happens because you don't have an entry and exit strategy in place. So what do I mean by exit strategy? It's like setting target returns. Okay, 20% return, and then I exit. Or it could be target holding period. I'll hold this particular stock for 3 years, and then I'll not care about the return. When it's exactly 3 years, I'll sell it. That could be one of the exit strategies. Or it could be both. It depends on the nature of investment and all the answers of all the questions I've talked about previously. The other thing is re-entry strategy. Now, one of the biggest diseases I've seen in Nepal is that among stock investors that they need to own stock all the time. I need to have it. If I don't have it, then I'm missing something. I've seldom seen any investor that sold all the stocks and have like lived without having any stock for 1 or 2 years. I was talking to somebody and we sold it and then we again bought it. So it's just like that. And it's very important to have a re-entry strategy. Now for us, at the moment, for me, it's just about waiting for the next 2 years. Because I see a lot of supply coming in the next 2 years due to the monetary policy setup. And the demand side creation is very weak. Government is not working on that. Demand is very weak. The same demand side is there, and supply is getting higher and higher and higher, and that puts real pressure in the market in the long term. So that's our take. And these are the few of the things that comes under the investment plan. And I think that we have an good investment plan. Returns are for sure. I hope I did some justice sharing on stock investment 101. Thank you and happy investing.